As promised, I have released my custom trading journal, which is accessible via Google Sheets. If you haven't already, you get your free copy from my website or using the link in the description below. Now, this video is going to be going over how you can access your free copy as well as how to use this trading journal. Again, there's no fluff on the Just Easy Options YouTube channel, so let's just get into it. We can start off by going to justeasyoptions.com or the link below, and we'll have to navigate to the YouTube giveaways page. Now, if this is the first time you're accessing the site, you'll most likely get a pop-up asking to enter your email address and name. Of course, you could just close this window, but I would greatly appreciate it as this is one of my methods to track how many downloads there are. And again, I apologize for my sketchy looking website. I am not a web designer by any means, but I am learning as I go. So if you haven't grabbed the 100 subscriber giveaway yet, you can here. This is an Excel option premium calculator, and I'll link the tutorial video to this as well as an overlay, or you can watch the video from this website. Now let's scroll down to the 250 subscriber giveaway, which is again the custom trading journal, and we can click on the add to Google Drive button, which will open up. This is actually the master version, which I have locked down as a view only, so you can't make any edits here. But what you can do is make a copy of this file for your own personal use. So we can click on File and go to Make a Copy. Now, of course, you need to have a Google account at this point. If you do not have a Google account yet, what are you doing? Go ahead and make one. But provided you do, we can just go ahead and change the name of this to something meaningful, like something like 2022 Trading Journal, and select a folder to have it stored in. And once you hit OK, it will launch this copy version. Now again, this version is completely owned by you now. Nobody can access it unless you happen to store it in a location that has sharing active for it, but more than likely that's probably not the case. Now, as you'll see, I do have a few trades in here already, but they're mainly just to serve as example trades, but we will go through a few of the common entries that you most likely will be using, just so you have a clear understanding on how to use this sheet. So on the summary tab here, just about everything is auto-generated. The weeks will add in as you add in your trades, and the profit loss per stock and the graph, as well as the cumulative total, will auto-populate as you just use the journal and enter in different trades. The only thing I would recommend you change here is probably the investment entry. I would make this be whatever the total amount of cash you're planning on using in this trading journal for referencing to the different accounts that you're associating with. This is my third or fourth edition of the trading journal, and I was just using this for my Tastyworks demo account, so that's why the investment here is only $2,000. So let's say we're actually starting with something like $5,000. Now let's switch over to the Ledger tab and enter in a few demo trades. But to start off, let me clear out all this information. And anything that's in the light gray is going to be something that you'll enter in. The dark gray will be the auto-generated formulas. And if you have missed something in the video, I do have little tooltips above each of the columns that'll tell you what you can enter in for each of these columns, or where the column's expecting, or the formulas are expecting you to enter in. Okay, so let's say that our first trade is a position in the SPY. Let's go about how we would enter in the information. So let's say it's the first of the year, so this would be week 1, and the ticker, or the stock abbreviation for the SPY is SPY. And let's say we're opening again that first week, so we'll do 1/3/22, and let's say the expiration date was the 14th of January. Now under position, you would type in what type of position you're entering. So let's say that we were going to do a long call position on the SPY. We would type in call here, and then for open, we would put a B for bought to open, because we're not selling to open it, we're buying to open on a long call position. And then the strategy, we would type in D for debit, because we bought to open it. Again, above all of these columns, we do have tooltips that'll help tell you what needs to be entered, or what different letters will mean. For the DOC, this is going to be just the price the stock was trading at when you opened the contract. Again, this is in the futures, so I don't know what it'd be at, but let's just say for an example that was trading at 465. The days till expiration is just going to calculate how many days from today until the contract expires. Again, this number looks a little funky because I'm placing a trade that's in the future, so that's why it's showing 22, but normally this would give you an accurate of like when you bought the actual contract, and then as you're going through how many days are left. The current stock price is just pulled from Google Finance. I know this is delayed roughly like 10, 15, or 20 minutes, it says. Generally that price is delayed. So just be mindful of that. Now, strike prices will enter in the strike price that we sold the contract at. So for this long call, let's say we did something like 471, and then I'm not exactly sure what the premium would be, but let's just, for example purposes, assume that maybe it was about $800 for this contract, and we'll say that we bought one of them. If you aren't trading on Webull or Robinhood, you'd have to enter in the fees next, and this is done as a per contract, not per share. So type it in as it is. So that would be 65 cents generally for most other brokers. Also, if you're not on Robinhood or Webull yet, hit up my referral links down below. I do break down both of the platforms. Plus, if you join, we both get free stocks and you'll be my friend forever. So that'd be cool. But if you are trading with Robinhood or Webull, go ahead and drop in a 0 for the fees there. Now, if you're entering this while the position is open, you can skip to the end and just type in that the contract status is open and the account or broker that you're using for this. So let's just type in Robinhood here. Now, with the long call, you'll see that the profit loss right off the bat is negative, and that's because we aren't comparing active option prices as a basis to your option purchase price. So that's why here and on the summary page, it'll show this is a max loss until the position is actually closed. But better to prepare yourself for the worst case, right? But once you were to close the position for whether that be a slight loss, a max loss, or profit, it'll correct at the time that you type in that exit price, close date, and change the status to closed. So let's go ahead and enter in a long put trade just to show how that looks. So let's say that we wanted to open up a position in week 2 on open door. So we'll type in week 2 here, we'll type in that ticker, and let's say that this was on 1/12/22 and expiring on 1/14, same as our SPY contract. Again, I said we'll do a put, and let's say that we bought to open that. Again, it's a debit because it's a long put option. Let's say that the contract or open was trading at maybe 13.5 at the time of purchase, and let's say that we bought a $12 put. And again, I'm not exactly sure what the premium would be, but let's say it'd be maybe $78 for this contract, and we'll say we bought one. Again, we'll do fees at 0, and we'll say that this is open. Let's say a few days go by and we end up closing both of these positions on the 14th on expiration day. We could type in what we actually closed them at. So for example purposes, let's just say that the SPY increased in price and we were able to actually sell this call for $1,400 versus the 8 that we paid for it, and we did that on 1/14. And then let's say on open that the stock actually just traded sideways, so we ended up cutting our losses a little early here, and we sold it maybe for $38, also on 1/14. So now both of these positions would be closed. So here we can see that we made $600 on the SPY call, but lost 40 on the open put. And then on the summary page here, we can see again that like week 1 we had the $600 profit loss, but then after week 2 came in with a $4 loss on that week, we have now a cumulative total of $560, and we can see our SPY and open profits there as well as on the chart. So hopefully you're following along well here, but let me show you a few different spreads. Those are the ones I find the most beneficial to be using in a trading journal, just because of how difficult it is sometimes to know the profit loss on those. So I'm going to do these ones a little bit faster, but let's say in week 3 we were to sell some credit put spreads on Mara. So we'll type in here, and since it's a spread, it's more than one leg, so I'll type in both of these at the same time. So again, let's say we're doing this on Mara, and week 3, let's see, what would the date be for week 3? It would be the 17th. So we'll put in 1/15/22, and let's say that we would be 21. And let's say that this is a put credit spread. So those would be able to be puts, but again, since it's a spread, we're buying one and selling the other. And for this strategy, we put in a V for vertical spread. Again, I don't know what the stock will be trading at, but let's just say it was trading at maybe $35 per share. And let's say that for our strike, we did a 34 for protection, and we sold a 36 as our short put. And again, I don't know really what the premiums would be around for here. but let's just say it was maybe 120 for the long put option and 170 for the short. So we can see that as we sold it open for a profit of $50, and ideally you want this to expire, right? So we could go ahead and put open here. Now, when you add in a spread into the sheet, you do not need to specify whether that spread is a credit spread or a debit spread. The sheet's smart enough to know. It just looks at what option was more expensive to determine if it was debit or credit. So let's add in maybe an Apple debit call spread for the same week, just to show how that looks. So we'll type in Apple AAPL, and we'll do the same expiration dates, but these will be calls. And we're going to say that this is a debit call spread. So again, I don't know what Apple would be trading at around this time, but let's go like 175. But let's say we're expecting it to go up, so we'll do a debit spread of like 177 and 180. And the premium, and again, I don't know how much this would cost, but we'll say it's probably 500 for the this one, maybe 350 for this one. I'll just fast forward in the future and say we actually won on both of these. So for the Mara, obviously that would mean it expired worthless. So they both go to 0, and this would have been happening on the 21st. So I could close that. And then for debit call spreads, it is kind of hard to see a max profit without actually getting exercised, but we could just type in that maybe we sold it a little bit early. So let's say that we sold this for maybe $7, and then we bought back this one for maybe, let's just say 4. That's not more than max rating. Okay, yeah, on the expiration date. Again, I'm just putting in theoretical numbers here, but of course you'd be obviously putting in what you actually sold or bought the specific legs for at closing. Now moving on here, if you're selling a covered call or a cash secured put, you're going to treat them kind of the same as a single long option, but you just have to specify that you sold open it and then put in a C for covered option. So let's say that we did a cash secured put in week 4 on Newegg. That's Neg. And week 4 would be 124.22. And let's say it's expiring the following month. So again, I said covered or cash secured put, so we'll put in put here, and we sold open, and then we put C for covered because we're covering it with cash. Again, let's just say that the I don't know, the stock's maybe trading at $12 at the time of contract, and then we sold a $10 strike put, and say we got $120 for it. So that's how you would open up a cash secured put. So hopefully by now this is starting to make sense on how to use it. But the last thing I wanted to show you was how to handle stock position. Now honestly, I wouldn't recommend using this journal just for stocks, but it does have the capability, and I tend to use it to track the stock profit when I'm running something like the wheel strategy. So let's say, for instance, that's what we were doing. We actually owned 100 shares of Skills in week 5. So I'll type in that ticker, and that would be 131. Now for the expiration date, we'll just put in NA because stocks don't have expiration dates. And then for position, we put in stock. We bought to open this stock, of course. And then the coverage strategy, we have to put in a S for stock. Autocorrect into the column title there. And let's say it was trading at $8 a share there. The dates of expiration, of course, that's going to be blank because there's not an expiration date on stock. For strike price, we'll just type in 0 here because stocks don't have strike price. And for premium, also we'll type in 0 here because they don't have premium. For contracts, you enter this in quantities of 100. So if we were to buy 100 shares, we would type in 1 here. And you'll see here that the cost basis now has a value. And that comes up when we put in S for the strategy. And this is just to show you what the cost basis is of your shares, and it'll look at all future options underneath the same ticker and update the cost basis based on the premium that you receive from those. So this is really helpful when you're running the wheel strategy. It also helps with determining, you know, possible strike prices to sell for that wheel strategy or any other strategies that involve going back and forth with different calls and puts. And I guess to demonstrate that, we can sell theoretically one covered call against our stock, maybe in the same week, just to show how that looks. So let's say do the same thing for skills down the same day, and I believe that would take us, if we did just for a week, it would take us to the 4th of February. This is a call, and then of course we're selling a covered call here, which is a covered position. Say that it was trading at $8, and let's say that we did a $9 strike call and got maybe $100 for it. Now you'll see right away once I typed in that I got premium for it and I got a certain amount of contracts, you'll see that the cost basis here actually dropped $1, and that's because we bought at 8, but we sold a covered call for $100, so that would mean technically our cost basis on skills based on the premium that we received there makes that $7. And just for example purposes, let's say that we actually got exercise on this covered call. So of course on the covered call, the exit price would be 0 because we got exercise to 422. Then you can type in here exercise. So this is open again. And then since we got exercise, we had to sell our shares at the call's strike price. So since that was 9, we'll say that our exit price for the shares was $9 per share. Type in 0 because we're using Robinhood. And this is also on 2422. And then once we change this to closed, it'll update, and you can see we made $100 theoretically off of the stock, and then $100 off of the covered call, or you would see $200 from the cost basis. Again, all evens out. So those are a lot of the examples that you probably will most likely be using, or a lot of the more simpler strategies. But again, this sheet is pretty robust. But again, this is all just showing how to use this sheet. Please don't make these trades just because I made up some profitable numbers here. I have no idea how these stocks will perform next year. But back on the summary page, we see our week's breakdown and the total profit and loss, as well as the specific stock profit and loss. Again, I think it's pretty neat, and I do think that it's very helpful and would bring value to your trading belt. Now, I hope you enjoyed this video. Of course, please subscribe if you're finding this information valuable. Your interactions and comments on my videos really helps me stay motivated and produce more content for everybody wanting to learn. And if you run into any issues with the sheet or find a bug, please let me know in the comments below, and I'll try to correct that. Thank you.